Hello, everybody. Welcome. Welcome, welcome, welcome. Let us start with if you are on YouTube Live Patreon, join us on the YouTube by clicking on the YouTube logo at the lower right corner of the video. Join us at live chat. All right, let's get started with Finviz data. I'll share my screen so we can go through it together. Here is the screen. Perfect. Let's right now you can see on the Dow Jones flat, Nasdaq up 1.5%, S&P 500 up 0.9%, Russell 2000 up 1.5%. You can see that at the top. And in the heat map, you can see that it's all driven by a few megatech companies. Apple up 3%, Nvidia up 4%, Microsoft up 2%. If you're watching this, please join us on YouTube live chat. Let me know that you're here. Financials are down again today, and oil stocks are down again. Let's click into this and switch this to 1 week performance. Apple up 9% in the last week, Broadcom up 6%, Microsoft up 4%. I think financials had a bad week here. Let's see, American Express down 5%, Visa 2%, JP Morgan down 3%. Some of the banks are down. Interesting moves here. There's a bit of a shift going on in utilities as well. Pepsi down 6% in the last week. That's interesting. And AMD, the distinction between AMD and NVIDIA is pretty amazing. Let's look at the last month. NVIDIA up 39%, AMD only 6%. In the last year, NVIDIA tripled, AMD up 24%. All right, let's go to MBA Mortgage Applications Index was announced today. Thank you, Steve. Thank you, Theo. Thank you, Justin, for letting me know you're here. You can see over here that MBA Mortgage Application Index bounced 16%. This was driven by refi index, specifically for refinance applications. Purchase applications also increased, but much lower than 16%. Purchase applications remain at a very, very depressed level for mortgage applications. The demand for housing is still very low. This is driven by refi. The big news of the day was CPI report. CPI came in flat on the headline. Core CPI was up by 0.2%. If you take it out one more decimal point, it was up 0.16%. Half of what was expected. And this led to a big drop in treasury yields by 10, 11 basis points. And that, I believe, drove stocks higher today, especially big tech stocks. FOMC announced their decision, kept the rates the same, and I thought the rhetoric was a bit more hawkish than the market's priced in. I think what's going to happen is the Fed will end up staying higher for longer than today's optimism seems to indicate. So this may reverse in the coming days, but we'll see. We'll see about that. In my macro update on Saturdays this week, I'm going to include an analysis of the Fed's speak. We can look at that real quick, actually. FOMC statement, let's just pull it up. Unless if you guys have any other questions. So if I share this tab right here, this was announced today. Federal Reserve issues FOMC statement. Recent indicators suggest economic activity has continued to expand at a solid pace. Okay, job gains have remained strong, and the unemployment rate has remained low. So, like this, I said yesterday in the after party, I said, I wonder how much the Fed is going to recognize the unemployment rate has increased in recent months. And they didn't at all. They downplayed it several times. Like here, for example, in this sentence, they say unemployment rate has remained low. It doesn't say it's increased. So they're not concerned about unemployment rate rising at all at this point. Inflation has eased over the past year but remains elevated. See, another hawkish statement. They're pointing to inflation being above their target rather than unemployment rate increasing. In recent months, there has been modest further progress towards committee's 2% inflation objective. The committee seeks to achieve max employment inflation at the rate of 2% over the longer run. The committee judges that the risks to achieving its employment inflation goals have moved toward better balance. Economic outlook is uncertain, highly attentive to inflation risk. So again, another hawkish hint here. In support of its goals, the committee decided to maintain target rate. Okay, in considering any adjustments to the target rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Nothing boilerplate stuff there. The committee does not expect it will be appropriate to reduce the target rate until it has gained greater confidence that inflation moving sustainable toward 2%. So this pretty much takes off the possibility of a rate cut in July. Okay, they're going to want to see several CPI, PPI, PCE reports like the one we got today. The committee will continue reducing its holdings in treasury securities and agency debt and agency mortgage-backed securities. So quantitative tightening continues. The committee is strongly committed to returning inflation. Another hint here that they're prioritizing inflation over unemployment. In assessing appropriate stance of policy, the committee will continue to monitor the implication of incoming information boilerplate. Boilerplate will take into account wide information boilerplate. Voting for everybody. So unanimous vote. So no mention of a rise in unemployment rate. I think that is notable. Okay. Let's take a look at some analysis here. So if I share my macro analyst Twitter, okay, go to my following. Nothing there, nothing there. FOMC projections for inflation were clearly before the report today. The next projection will be released in September. We have the ability right now to approach rate cut question carefully and not at a point of giving dates for rate cuts. So they're not even thinking about cutting rates at this point. So he's being cautious. He's saying it's not going to be July. Households are still pretty good shape despite higher credit card balances. Okay. Powell. This is Nick Timiraos, the Wall Street Journal editor, correspondent for the Fed. If you look back in 5 or 10 years and try to pull out the significant to the U.S. economy of 125 basis point cut, you have quite a job in your hands. Yeah. Pre-pandemic, ultra-low rate world may not return. Powell asked about longer. This is another one that I think is very important to watch. Long-run rate estimate. That is very consequential to discounted cash flow analyses, where the rates are going to be in the longer run. Long-run estimate moving up again. This is the second time they moved up, I think, to 2.75%. Replied that neutral rate is a theoretical concept, not something specific, and that it doesn't really get you where you need to be in terms of whether current rate stance is appropriate. Also said Fed officials are coming to view that rates are less likely to go down to pre-pandemic levels. So these are all very hawkish comments. Powell says housing situation is complicated. I'm going to go back to the recording and see what else he said on that sentence right here. No one has rate hikes as base case. Okay, good. So higher for longer isn't the name of the game. Won't be specific about how many good inflation prints they need. We had a pause in progress in inflation in first quarter. Takeaway was that it will take longer to get to rate cuts. Okay, good. Good. So back to here. All right. Any questions about the Fed statements? Please put them in live chat and I can answer them. Can you guys hear me okay right now? Tio says military actions starting on the East Coast going to be problems for the market. I'll keep an eye on that. I haven't seen anything on that yet. Today in the space, Omar talked about 12.4.1 being very good. Rocco put out a tweet yesterday saying he had his best ride ever on 12.4.1. There are a couple of people who say 12.4.1 is worse than 12.4.6, but they are fewer. They're in the minority, and I suspect that has something to do with not kind of appreciating this one step back, two step forward process that the FSD has done. So tomorrow is the shareholder meeting. We have a wide range of views of what the outcome is going to be on Elon's vote. We had Grant today come up and say, propose a confident thinking. Okay, I see. So I can't walk away from my laptop, even though I have my AirPods. That's weird. Anyway, Grant proposed a coffee bet saying that Elon's comp vote is not going to pass. This is also the view of Tony Sacconaghi from Bernstein, who gets a lot of slack for being a bearish analyst, but he has been accurate in several occasions in the past. So I do pay attention to what he has to say. And then Lauren came up and said, I think it's going to be a blowout yes vote, which I don't see how that's possible with passive investors voting no. So we talked about Optimus. We talked about ARK Invest's model. ARK Invest, shockingly, and truly shockingly, they still don't account for Optimus in their forecast, which is amazing to me because you have your CEO telling you it's going to be the majority of your intrinsic value. I did a quick look at their assumptions, nothing exhaustive. I think their margin assumptions are going to prove too optimistic. Their EBITDA gross margin assumptions are going to prove too optimistic. I'm not going to go into too much, but it's just that like what they label as bear case is not the true bear case. The bear case really is, obviously, if Elon leaves, that's a horrible situation. But let's say he stays, but the robotaxis come to market, but they're not competitive with other solutions. That Waymo and others scale just as fast, and they keep a lid on Tesla's margins. Now, that could be a bear case. And, Optimus comes to market, or maybe doesn't even come to market, or comes to market and has low margins because of competition. That's also a bear case. So, we talked about ARK's historical performance. Machine pointed out, and I agreed, that if you take out Tesla, among their hundreds of investments, their hit rate is very low. Their returns are much lower than NASDAQ. Um, I think it might actually be negative. So it's not really a source I follow. Freddie is asking, has Vanguard said how they would vote? I didn't see any public announcements, but I'm pretty sure the passive investors are going to vote along with Glass Lewis and ISS recommendations. Trying to remember what else we talked about today. I think that's about it. I think it's very positive that inflation is coming down, but I think that people should not jump to the conclusion that the Fed is going to cut rates sooner. Let's look at the CME Fed Watch tool. Sharing this tab and switching to, there we go. You can see here that even after these hawkish comments, the probability of a rate cut in July is still 8%. Like I would think that this is going to move towards 0% in the coming days, let's say in the next week or so. And then September, the market is expecting pricing in one rate cut. The current rate is 525 to 550 base points. And the median expectation for where the rates are going to be by September is 125 base point cut lower. So that's interesting. Yeah, I think these are going to reprice in the next few days. I guess we'll see. Tomorrow morning, we're going to get to PPI data. And let's see what that shows. One very positive note on the CPI report today was super core CPI came in negative. Super core came in negative, which is a major change. Let's look at some of these other comments from Powell. Supply and demand in the labor market. You can see this on your screens, I think. Yeah. Supply and demand in the labor market are in a better place. Unemployment rate remains low. Consumer spending remains solid. Yeah, he's not concerned about economy rolling over at all. Strong pace of immigration has boosted participation. Okay. Look at that. Mohamed El-Arian points out, let's click into this. On the surface, the Fed's SEP has been subjected to a hawkish tilt, as reflected in higher inflation forecasts for 2024-2025, the move of the median cuts for 2024 from 3 to 1, 4 up from one FOMC member expecting no cuts this year, and the slight move up in the neutral rate. Yeah, these are all very hawkish. I strongly suspect that the market's relaxed approach to this reflects the view that the SEP does not fully reflect this morning's inflation data, all of which makes the press conference, which is about to start, more interesting. Yeah, I think the press conference was just as hawkish as the statement. So, Costa, welcome. Finally made it over from Patreon app. He says, glad to be here. Great. Thank you guys for participating in the after party. If you have any other questions, please leave in the community chat rooms. Tesla was up substantially today. Obviously, things can change tomorrow. Omar seems to be more excited about the 8/8 event, more so than the tomorrow's event. So we'll see. I think 8/8, we're going to have a hardware unveil. We're going to have additional vehicles, hopefully, maybe a cyber van. By then, I think Cybertruck production will have ramped further, and we'll get more updates on 4680 production as well. But tomorrow is the day everyone's focused on right now. Omar pointed out, and I agree, that there seems to be a cloud over the stock Nobody wants to buy ahead of this event. I agree. All right, we're going to end it here. 20 minutes. Thank you very much, everybody. And I will talk to you next time. Take care.